Dividends can form a great cornerstone to any investment strategy. They pay you an income you could reinvest to grow the number of shares that you hold, leading to increased payouts in the future. But just looking at really high yielding stocks could be a huge mistake. First of all, you want to be looking at making sure that it is a quality business, that they are showing growth in their earnings so that they can maintain and continue to grow that dividend. Welcome back to the channel, and if you're new here, hi, I'm Mark of Desperately Seeking FI. In this video we're going to do a quick run through what is it we should be looking for in a stock and what are some of those key metrics that we want to focus in on to hopefully buy into stocks that are going to continue to grow and continue to see that growth in the income that you're building up within your portfolio. First of all, you have to decide what is your investing strategy going to be. So you want to be focusing in on stocks that meet your criteria. Is it that you are looking at yield for income, or potentially is it that you are looking at dividend growth, so that you are looking at that growing over time? You want to go back and have a look at the company's earnings history. You want to see, are earnings growing? Because if earnings are growing, there is greater opportunity for sustainable growth of that dividend over time. Consider valuation. Do you want to be buying in at things that are providing value, or do you want to continue buying as things move with momentum? One of the tools that I'm using at the moment is Stockopedia to actually look at all of this, and I will throw a link down below where you could sign up and get 25% off whichever package you wish to go for. You really want to be paying for a quality business at a reasonable price, because if you pay too much in the first instance, that will have a huge effect on your yield on cost. You also want to look at your position size. What you don't want to have is a company that is massively outproportioned within your portfolio. Most people talk about having no more than 10% invested into any single company, but this will all come down to how many companies do you plan to have within your portfolio. What is that sweet spot? That is a question for another day, but many people are saying anything from 20 to 30 stocks. So if you have a think about that, across an average, that might be something between 3 to 5%, which means you top end, definitely all you would want to hold is 10% of your whole portfolio in one individual stock. And as we always say, investing is a marathon and not a sprint. So you need to have conviction to hold these stocks for a long time, unless certain things happen. For example, a massive cut within that dividend might trigger you to actually sell out of the company. And holding for the long term feeds very much into this approach of buying into high quality companies that have managers that you believe in. So when you're doing your research, you are also having a look into what is that management team like, because they're going to be the ones that will drive growth in the company, which then converts to an increase in that dividend payment over time. A couple of facts about dividends. Firstly, how are they paid? If you are using a platform like Trading 212, if you don't have a Trading 212 account, I'll drop a link down below where you can go and sign up with as little as £1, and you will get a free share of a value of up to £100. Terms and conditions do apply. If you're using Trading 212, providing you have held the stock on the ex-dividend day, you will then get on payment day, you will get your dividend paid in your account, and you can decide what to do with it. Go buy yourself a nice meal or reinvest it back in. Reinvest it back in. That's the best way to use it. How often do these dividends get paid? So it will all depend on what the dividend is. If you are buying into a dividend stock like Realty Income, the monthly dividend payer, they pay monthly because it is a real estate investment trust, whereas you have quite a few dividend stocks will pay quarterly, things like GSK and Primary Health Properties, which I hold in my portfolio, or in the UK, they will tend to be biannual, so they will pay twice. They will pay an interim and a final dividend throughout the year. And on very few occasions you will get a single payment every year. Sometimes there will also be a special dividend paid as well. So if they've done particularly well over the year, they will pay back shareholders through a special dividend. Or they may decide to do something like a share buyback. How much is that dividend going to be? This is up to the company's board of directors will decide how much money they're going to pay for a dividend. And you can use free apps like Dividend Data to go and see how much places or how much companies are going to be paying in their next dividend. And they tend to tell you this in advance. If you find some value in this type of content, I would love it if you could drop a comment down below, hit the like button, or even think of subscribing to what do we need to look at in a dividend stock. What I do recommend is, if you're new to this whole game of investing, invest some time and learn about investing before you jump in with 2 feet. You could save yourself a lot of hassle by just going and looking at some stocks, and Stockopedia is brilliant for that. You can use the screens or you can create folios to see what stocks are looking like, and there are lots of ways of looking at different types of factors. Or you could go in and have a look at, particularly as we're talking about dividends, go in and have a look at some companies and how are they doing on that income side of things. So some of the key things to go and look at in a dividend stock. So there is that whole, how much is it actually paying? What is that dividend yield? Once you've had a look at that, you want to go, first of all, you need to figure out what are the parameters that you are trying to look at. How much do you want a yield being? I tend to go for something from about 4% to 8 or 9%. Beyond that is potentially getting into dividend trap territory. And if we have a quick look at what has happened to Vodafone, and it probably is a good thing for the company, they have reduced their dividend from a ridiculous 11%, and in the last few days they have cut that in half. What we need to look at is how sustainable is this dividend being paid by the company. So you have a thing called the payout ratio. Payout ratio is the amount of money paid by the company per share in dividends divided by the earnings per share. We are looking at a low payout ratio of, say, somewhere in around 70%, being a good sign that this is going to be a sustainable dividend. The lower, the better. You also want to go and have a look at the history of the increases. So a good sign that a company is going to be able to continue to maintain or grow their dividend is having a look at their history. One of my go-tos is Dividend Data, where they will show you what the history of a dividend paying company is, and you want to see that constantly going up. You also want to see steady revenue and earnings growth. And if we have a look at the Stockopedia stock report for B&M Bargains, we're looking at one of those key things being that total revenue. Is that showing growth over time? And as you can see, from 2018 onwards, it is gradually an upward projection to the right. You then also want to go and have a look at the operating profit and the net operating profit. And we're looking at quite a tidy little compound annual growth rate for all of these financial summary metrics, with somewhere between 10 and 17% growth. So you want to make sure that it is relatively stable, that you don't have some years where it's peaking right out and then next year's you see a massive drop down. You want to keep this nice and steady and show that steady growth. Another thing that everybody talks about is some form of competitive advantage. So you want to see a company that has a unique selling point, and this might be in the form of some form of technology, high barriers to entry, high customer switching costs, or a powerful brand name. Coca-Cola is one of those standouts. Everybody knows the name. And there is one thing to think about in all of this. Investing is a long-term game. You will see volatility. You will see prices going up and going down. Forget about the noise. It is, where is this company going to in the long run? And providing you've gone through all of those basic steps, you've got conviction in that company, you can then invest into it. But make sure you've done your own due diligence and do not get spooked when markets go up and down. We have seen it in the past and we're going to see it in the future. Why don't you go and have a look at this video where I'm talking about some dividend stocks to give you an idea of where you might want to go and start looking at. Thanks very much for watching, and I will see you in the next one. Cheers, bye.